Welcome to Thursday's Market Sit Rep here at T3 Live. Matthew Buckley, the Chief Options Strategist, and it's all about the ECB, folks. Mario Draghi came out of the blue this morning with essentially, the Bernanke Part 2. The ECB president says, I'm standing by, and we're going to come essentially on a 2-year quantitative easing. So obviously the euro implodes, European stocks cheer the announcement. So obviously so do U.S. equities as well. So, obviously good news is good news, bad news is good news, and awful news is great news. Europe's really wallowing in this ultra low inflation environment and really seeing a flagging economic recovery. A lot of the Eurozone is in recession, triple dip recession. Germany's not doing good. Spain, obviously the pigs, Portugal, Ireland, Italy, Greece, Spain aren't doing so hot. So not doing so hot, what do? We turn to central bankers for quantitative easing to soothe our boo-boos, right? So will it work? Who knows? It worked in the United States to do what? Drive equity prices higher, drive people out of essentially less riskier assets and into riskier assets, i.e. The stock market. Other news, obviously, initial jobless claims were a beat. 4-week average is near 40-year lows. Hey, that's that's pretty good news, Whiz. Well, actually, not really. The Challenger job cuts came out. They surged 68%, the most in 3 years, and that's the worst since October of 2009. So, U.S. companies laid off over 51,000 people in October. Okay, that's the most since May, and the second most since February of 2013. So that's not a good sign. Okay, so October job cuts kind of bucking a trend here, and that's never a good sign. Okay, so maybe these folks can get together and start sorting stuff out. The president and the heavies from the other end of the avenue are supposed to be getting together tomorrow to lay out where each other is, but as the Wall Street Journal says right there, Obama and McConnell pledged to work together, but insist they won't give on key policy goals. Shocker. So get ready for another 2 years of gridlock and not getting anything done. Obviously, the president is going to give any on his agenda, and neither are the Republicans. And everybody's already looking to 2016. So what are we doing? We're kind of wallowing around here. We had an initial spike on the ECB good news, and then kind of faded. I think the Challenger job cuts are starting to settle in a little bit, but obviously tomorrow, the biggest thing on our flight schedule is non-farm payrolls, right? So tomorrow, we're gonna see if we get a 2 in front of this. I think it's relatively good news, right? They're forecasting 229,000. We got 248 last time, so we see a 2 in front of this. I think we're good to go. And as long as we see a 5 in front of this, and we don't see a jump in that, which we really haven't. We've seen the unemployment rate going down for all the wrong reasons, right? Labor force participation rate. I mean, even my son knows what that is now because that's all we've been talking about for the past, it seems like 6 years. So it'll be very interesting. And then the chairwoman will come in after the jobs numbers, and she is speaking. So it'll be interesting to see what she says, see if she says anything about Mario Draghi or the jobs numbers or even the election. Okay, she is speaking at policy since the onset of the financial crisis at the Bank of France's symposium on central banking, the way forward. That should be interesting, and she's taking questions. So grab the popcorn and get ready for that. Okay, so I'll be back with Friday's market wrap up. Got a couple weekly options positions that are looking okay. But Apple, we have an Apple bull put spread on the 107, 108. It's down about $600 right now, but we're wallowing around that 108 level on Apple, which is kind of recent strength here. So looking at a potential $2,000 gain, hopefully by the close tomorrow, and a bear call spread on Chipotle. Okay, so have a great week, rest of your day, and I'll talk to you guys tomorrow. We'll see.